One.
For frequent listeners of this broadcast, we often can be repetitive and say momentum, 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 or chop, 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 chop. That is what we've had this week. We've had some big moves, but overall, we have just been hugging in this 5600 handle, unable to break out over resistance and not able to break out through last week's low. Well, we got one more day left for that before the 3-day weekend. We got some good earnings and we got some bad earnings, and we're going to share them with you. Tim Quast, 835. He'll come in. He has his usual comments on the markets, and maybe our 8:30 numbers will shake us up a little bit here on this Friday. It's pre-market prep. Let's get it started.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, traders and investors, we are up 23 and a half handles, caught a bid right above the close. No man's land as far as resistance goes. We know that it's way up there at the 55-65 area. The bucket's creeping up a few pennies. Nothing great, 101.30. TLT up 24 cents. Nothing much there. Crude down 9 cents, 75.82. Gold having a red day here. That's silver. Gold having a little bit of a red day. Ooh, we got a multiple top area here in the gold. Keep an eye on that. Down about $8, 25.52. Silver cannot seem to clear 30. Down 6 cents, 29.92. Bitcoin futures, $190 to the green, 59,835. Let's bring in Triple D. Triple D, will you give the audience the details of your broadcast on Monday? Because you got to work Monday while AB and I will be out.
Oh, I think it's Labor Day in Canada too. Believe it or not, this is one of those shared holidays. Often the Canadians and the Americans have different holidays, but no, actually, most of our holidays are shared. This is one of those shared holidays as well. It's the last day before my kids go back to school. I know some place in the States that go back before Labor Day. We always go back the day after Labor Day. So, going to do a lot of boating this weekend. This is a big weekend for boating. Weather is supposed to be pretty good on Saturday. Going to do a little bit of boating maybe even today too. So, boating weekend, Joel.
AB, I got in late. I had the little problems. I heard you on. Was it Wednesday or you were talking about a back to school story? I missed that because I
He
was
never
rebooting.
told it. He had a story and he never told it. We never got to it.
Well, I did have a story the other day, but it wasn't a back to school story. I'm trying to think of what you're thinking of, Joel.
Well, that's the way you started the intro, and then I had to repeat. But okay, it's off.
Oh, yeah. Well, that was just because. So I did the intro like that on Wednesday because Joel, you set a high bar with the intros, where I try to come up with something, interesting, something witty. And Wednesday, well, of course, was Nvidia's big earnings day, and I saw it as a big test for the market, and that reminded me test. I was like, well, it is
Oh,
a test. It is, back
oh,
to
okay.
school. I don't like tests. I didn't like tests in school. But
I got you.
yeah. So
Okay.
that was what
Gonna
that
tell a
was about.
story. He's gonna tell a
Okay.
story. Let him tell a story.
Well, so the story from the other night, this happened Tuesday night, I believe. Yeah, I guess because I
Yes.
would have told it on Wednesday morning. Let me pull up. I had some pictures for it. This
Oh
is like
gosh, this is a good story.
That's a good.
another school thing. It's like show and tell here. Let me try to find this real quick. It's betting related, but I thought it related to trading as well. So okay, so basically Tuesday night we have different types of trades, right? Different types. If you're trading options, you can trade options in a way that's pretty, sustainable. But the way I do it is kind of more lottery trading a lot of times. And this was a lottery bet that I had. It was 4 different players in MLB to hit a home run. Let me try to pull this up real quick. Oh man, this is so small. Let's see how I can get this bigger. Slideshow. Here, let's try this. All right. So basically, I had 4 different guys to hit a home run. 3 out of the 4 guys had already hit one. It was giving me a cash out option of $1,200 on a $12 bet.
Take it.
So this guy, Jesus Sanchez on the Miami Marlins, he was due up in the top of the 7th. I was like, all right, I'll give this guy one more at bat. Let's see what happens. He gets a 3-1 count, does not hit a home run. And then so he gets out, and that's the top of the 7th inning. The way the game is set up, he might not even get another at bat. So
I know.
I might not get another shot at this. So after the at bat, after he got out at the
Hit
top
that
of the
bit.
7th, it's still giving me a cash out of $557.
Herbing this. You're
am
like a genius.
No, I'm texting. I text my friends and I'm like, look, it's giving me this cash out option. He might not even get back up to the plate. I should take this, right? And my friend's like, yes, 100%. Take that. So I take the bet, or I take the 557. As soon as I do, I'm like, oh God, why did I do that? He's probably going to hit a home run now. So then I find I bet on him individually to hit a home run with some of the money that I took off the table. So I put another, say, $150 on him to hit a home run. I still have $400 off the $12.50 bet.
Nice.
The Marlins come up in the top of the 9th. A couple guys get hits. So now he's going to get another at bat. And I'm like, oh God. Of course, first pitch of his at bat, he hits a home run. So I still won money on it. So I took $133, won $3,700 on that one, $50,
Like
$1,300.
no gambler.
But had I just let the bet ride, I would have made $20,000. Wait, let me see.
Oh my gosh.
$20,000 had I just let this initial bet ride. $12.50 to $20,000.
Oh my gosh, you're like a genius.
What addicting. Oh, I can't believe how addicting that is.
So you wouldn't have cashed out the 557 to get 20 grand.
I know, but so here's why I relate it to trading is because I still made $5,000 and I de-risked. Like the worst thing that could have happened, he didn't hit a home run. I still would have made like $300. And that happens to me in options a lot of times too, where I'll like make money and take a profit. And then I'll look back and be like, oh, had I held on to those contracts, I would have been up another 10. Like when I had those Apple calls that one week that Apple was going crazy, I was thinking about it like that week. I was like, if I would have held on to those Apple calls, I would have made X. And I feel like you can't do that. If you make $5,000 off $12, you got to be happy with that. You got to walk away. You can't be beating yourself up over it. But it was a funny night. And then to cap it off, I hit this one too. That was $20.
I didn't know Carl Yastrzemski was still playing.
It's his son.
Oh. All right, stocks.
What's the percentage return on that? $12.
Oh my God.
To 20 grand. I don't even know how to calculate that. Thousands and thousands and thousands of percent.
I don't know, $12 to 20 grand. If I could do that consistently, then I probably wouldn't be here.
You're unbelievable. That's
not how it
crazy.
Usually goes.
It's crazy odds. I know.
So how many people had to hit a home? So you bet $12.50.
4 people. Don't even ask them.
It sounds easy.
Yeah, Dennis, you pick 4 people to hit a home run
in one night.
I'll put $10 on it for you, Dennis.
Oh no,
I'm gonna start just giving up trading, doing this gambling with AB, and AB is gonna be my compulsive gambling coach.
But my friend,
we're gonna all become compulsive gamblers here. But wow, well, either way, that's unbelievable, AB.
My friend who told me to cash the bet out felt really bad about it. And I was
I
was like, don't feel bad. I was like, it was the right call. There was a good chance he didn't even come back up to the plate in the game, and I still would have made, so it is what it is. But I lost a bet last night on the over in the Buffalo football game. Football's back, which is fun to bet on. So that was the bet I lost last night. All right, let's get to stocks. Joel, what's the market doing?
Well, we're up near the highs of the session. We caught a big crazy day yesterday. We really don't know what that interday news was, and nothing's really ever been confirmed. But we fell out of bed like 60 handles in midday. Boom, really no news. Got a little bit below the close, then ended up having a double close. It was like a nothing day. So all the numbers just kind of lined up nicely. We caught a bid. We know where the major resistance is. I don't know if this PCE number is going to be enough to do it. But I mean, the range for the week it's been over 100 points if you include the Globex session. But we have just traded the day. I mean, it has been so choppy between 5,600 and 5,660 that we just got to go one way or another. Maybe the PC will be enough to put us over.
Chop.
Yeah,
chop.
that's what I said. Yep.
What this week has been. That is what the last 2 weeks have been. That's what we've been saying about the dog days of August. We said this, go rewind the show to 10 days ago. And we talked about a lot of sideways and a lot of chop. And how do you make money in choppy markets? You sell rips and you buy dips. And that is what is working not only on the stocks that aren't reporting, but the stocks that are reporting too, because there are violent reversals all over the place. We know NVIDIA was up, down, down, up, down, all over the place. Lululemon last night, I actually called this one on the closing print. I thought that if it dipped, there may be buyers to emerge, and that is exactly what occurred last night. AB, give us the details. LULU trading higher, but on the initial print, it was much lower. Oh, we lost AB. AB's on mute. AB's on mute.
Man,
and
sorry,
AB's camera is not working. We know, folks,
Yes, we
that he
do
is
not
here
know the
in
reason.
spirit
Yes, this is
and
yes.
voice.
Yeah, sorry about that. At least,
And
at
yes,
least
the
I'm
chat
here.
is talking about Johnny Hockey. R.I.P. Rip Johnny Hockey.
Yeah.
Tragedy last night. He got killed on, they're saying, a bicycle, hit by a car. 29 or he's 31 years old. Columbus Blue Jackets. And he was an Oiler killer. Like, I've had, obviously when Calgary versus Edmonton, a lot of rivalries with Johnny Hockey. He was a fabulous hockey player. I was actually glad when he got, when he left Calgary, because we don't have to play him so much anymore, because he was always an Oiler killer. But you never want to see this. He was a fabulous hockey, Johnny Gaudreau. They called him Johnny Hockey, fabulous hockey player. And his brother as well got killed. So rip the Gaudreau brothers.
Yeah, very sad news there. It's anytime, there's always, I feel like there's always a story or two like this every year where an athlete, like a promising younger athlete, I guess he was, in the middle of his career, but it reminds me of like the Jose Fernandez in baseball, or Nick Aidenhart, who was a pitcher but for the Angels, who got killed by a drunk driver probably about 10 years ago now. So terrible about Johnny Hockey there. The Lulu numbers, though, you asked about that.
Yeah, let's talk Lulu.
Not a great segue there. So I just
jumped into the chat. Multiple people were saying it. I wanted to address it. I'm a huge hockey fan, so I wanted to address, obviously, Johnny Gaudreau. Yeah. So R.I.P. Back to Lululemon.
Don't drive drunk. Get an Uber. It's so easy now to get an Uber, to get a Lyft. There's literally no excuse to ever get on the road if you've been.
Yeah, and I don't know all the details. Like, I don't think we do know all the details yet. We just know he got killed on a bike. So that's all we know. We'll find out more today. But tragedy. So back to Lulu here, AB.
Yeah.
Give us the numbers, and then we'll break down the trading action, because it's been crazy last night too.
So Lulu EPS came in at $3.15, beat the $2.94 estimate. Sales came in at $2.37 billion, missed the $2.4 billion estimate. So a slight miss on sales, but the EPS came in strong. They issued revenue guidance that was actually below expectations. So EPS, they said for fiscal year EPS, they're looking for $13.95 to $14.15. The estimate was $14. Revenue guidance, they said 10.37 to 10.47 billion. And the estimate was 10.6 billion. So the soft guidance kind of hit the stock initially, but then I think people came in and was like, actually, the bar was kind of low, and Lulu was a decent report. So the stock, I mean, you guys can talk about the price action after the report, but the stock got hit down to around $240, then got bought back all the way to $270. So some wild kind of whipsaw action there in Lulu stock.
I was talking about some of the closing print, and I just felt like if it went down, there's just so much bad news priced into the stock that it was likely to bounce back. And to Spinner's point, this is the cheapest stock as I can remember. I don't remember it trading with a valuation this low. Everybody has counted Lululemon out. We all know the analysts that put on, the Under Armour comparisons there and saying this is the next Under Armour. And, the fad is over. I don't think it is. And I've been talking about that. I even talked about taking a position ahead of the report, but I didn't have the guts to do it. And I talked about last on the closing print, if it dipped, I was going to go out and buy some. And then I didn't do that either. I got sidetracked and was up back. And, so I should have been coming in there at 239, 240, but I got sidetracked with other stuff. And then by the time I got back to it, it was already trading green. I was like, I don't know. So I do think Lululemon has bottomed. Now, 226. Does that mean it's go straight up to 300, 350 and beyond from here? I don't know about that. I don't know the path, but I do think the stock eventually is going to be back. I don't know the timing of it. It wasn't a fabulous report, but it wasn't a bad report. And good enough is good enough when you're in the gutter. It had a very low bar. I kind of like that setup with it. And obviously the dip was bought last night. So Good enough, good enough. You think about this PE, $14 isn't that bad. $268 stock. This stock for a long time traded with a PE of 40 or 45. Those days are gone. Lululemon could be back eventually.
A couple things on a fundamental note. I bought some stuff from there. I've been giving stuff from gifts from there since been changing my wardrobe since the pandemic. You got to buy stuff every 4 or 5 years, and Lisa's like, "Hey, why don't you go there?" And I'm like, "Okay." So I have been contributing, I guess, to their decline. But I got a number for you that you long-term investors absolutely have to keep an eye on, and that's the 275 area. We hit 275.04 earlier in the week. We snuck above it in the pre-market all the way to 77.85. I think that's just an overzealous algo. But always when you have a solid rebound, you have a high for a move, you like to see that high breached and then support above it. We are still $8 away from that, or $7 away. So keep an eye on that. It'd be nice to just form support in the 260 handle, 265, 266, and then build it up. Hard. I
Stop
don't know
going
where to buy
down.
this now. Yeah, yep. It's what was the low of the move? It didn't quite get to the low of the move. Now
Not last.
226. No, no, you had to be quick. We discussed this on the pre-market show. If you really wanted this one in these kind of situations, you just say, "Okay, close
Kinda gotta
my
be up.
eyes, 240. I'm putting my bid at 240."
And you
And
get
then
filled. If you're
if
out
you,
there ahead of the print, you get filled.
yep,
And even afterwards, but you gotta the way you want to trade these, and if you're just trading in small size, it's a lot easier because you can throw odd lots out there and then they don't show up on the book and they just get swept up and filled with the thing. So, if you're trading, and you just want to trade this, with 99 shares on an earnings report, keeping it under the 100, it's an execution tip. The under 100 helps because if you're on ARCA, it shows up. But
yep,
a lot of times they don't show up on the book. They don't change the official bid and ask. So you're
yep,
not spooking it. When you start bidding 100 and they're like, "Oh, there's buyers in here," and then they start lifting offers on you. The 99 share trick is pretty good. That's the one benefit of being small. You can get in and out easily. But if you're trading this with 1,000, 2,000 shares and you're a huge fish, you institutional traders out there, that's when they're using the icebergs and they're doing different things. But I tell you, the 99 share trick on these higher price stocks
that's
is
a
not
good
a
one,
bad trick.
Dennis.
It
That's a good
helps.
one. It's a
It
good one
helps
to
with
give
the
people.
execution. I don't know if anybody ever taught that. I've learned that myself just from executions. And sometimes if I got like 500 shares, I go 99, 99, 99, 99, just to not affect the market. Because when you bid 500, like, "Oh my God, there's a buyer," and they
There's
start
a big
lifting
buyer in
offers,
there. Must
they
be
all just
Dennis.
go, "Oh, buyers, buyers, buyers." 99 shares, folks, helps.
All
Next.
right, I see some other people in the chat talking about Baba. So we've spent some time on this show talking about Alibaba. We've talked about Lululemon. So we've got news in both stocks this
Breaking
morning.
it in.
Alibaba. Let's see.
Till tomorrow.
It completes its 3-year regulatory overhaul.
It sounds like good news.
It is. It's a good. I said to Dennis the other day on the Pin Duo Day. I thought it like held up okay, and Dennis like it's still $4. I got killed. I can't believe it. And I'm like,
just complain. Whenever I lose money, I complain.
I know. I just kind of like I thought that thing, would be at like 75 or something like that. But very constructive price. Actually, you got to be careful because a lot of this move's already been priced in. 84.85. You're right there. Your bid. You're at your pre-market high. Very close to it. Next daily high, if you want another target on the upside, that would be 85.79.
It's tough. I mean, it's tough to chase because every time Baba pops $3, it's down $3 like a week later or a day later. It's just the worst. It's possibly the worst stock to chase of all stocks to chase. One day, maybe we're going to get some follow through, but just even look at the longer term chart. All it is chop up action. Rallies $3-4, sells off $3-4. Rallies $3-4, sells off $3-4. The best thing you can do in Baba, take the money and then re-enter at your old price. What was that trading site that we used to always quote there by what was it? Now I forget. The one we always quote, the range trader there. Buy low, sell high, the same stock again and again. Channelingstocks.com.
Yeah.
Yeah,
Yes.
stocks trading a channel. How'd you retire already? Stocks trading a channel. You buy low and you sell high. Same stock again and again. That's Baba. It's the channelingstocks.com stock. At least in the last couple months.
So more details on the actual why it's trading up. So Alibaba has completed a 3-year regulatory rectification process following an antitrust fine it received for monopolistic practices in 2021. China's market regulator said on Friday, China's State Administration for Market Regulation said that over the past few years, it has been supervising Alibaba's process to become compliant with antitrust regulations. So I feel like even outside of just this actual the fact that it completed this 3-year kind of, it sounds like almost like a probation period, that it sounds like the Chinese government or the administration for market regulation is kind of warming up. It's kind of it's being a little bit more friendly than we're used to. So it could have some more implications just outside of this one thing. I mean, obviously, you mentioned it, Dennis. You and I are both long Baba, so like to see that. But I mean, the value here, it's that's really what you're scared of if you're buying Baba is A, the Chinese government, cracking down on its own companies, and then B, of course, anything that would happen with Taiwan. So
this is always the risk.
Yeah, if you take those things out of the equation, then Baba would be at least a $200 stock now. So
it would. But the problem is we can't take those things out of the equation.
No, you cannot.
Stuff there. So until Baba says we're picking up our stuff and moving to California, that'd be a big move for Baba if it did that.
Yeah.
They want to talk Intel, Joel in the chat.
Well, I just want
having a day.
Oh yeah.
This is the end. We're back. We're back. We're back. Well, I'm partially back because I sold part of the position down here, but we're back. Holy cow, what a disaster stock. But anyways, up 4%, so it's good for everybody that bought it at 20. Everybody that bought it at 20 loves this stock. Everybody else hates it. So give us the news here, AB. Intel doing something, breaking up the company or something like that.
Intel CEO, Pat Gelsinger, he addresses investor concerns amid stock plunge, which includes, I mean, that's never a good sign. But so Intel said to be weighing options, including foundry split as red ink mounts. So basically their foundry business, which is where they're actually producing the chips. They're thinking about spinning that off. The stock is the market likes that. Stock trading up over 4% this morning. So I guess there's a chance that Intel ends up spinning off part of its business, and you'd be able to invest directly in its chip foundry.
Invest in a losing business, or keep Intel? They said are they just trying to diversify their losses? We'll have some losses in the foundry, and then we'll have some losses here.
Look at Mobileye, Joel.
I know.
Intel, we still own Mobileye because 90% is owned by Intel. I mean, this is a disaster here too. It's like everything they touch turns to crap. And here you got Mobileye with the darling. We're going to go and have it on every car, and this is going to help us with obviously FSD and all this stuff. No, it's not. MBLY. No, it's not. It's crap too. Wow. Intel, just made of crap.
Yep. Crap inside.
The worst run company for the last 20 years out there. Hands down. I mean, where is it? Go the long-term chart of Intel. Go far back as you possibly can go. You just lose money. Everyone that's invested in this company loses money. Intel, you're back to where 2006 in this tech market. So, okay, we're back to 2006 pricing. And if you go back before that, you want to go to 2001, you can't go far enough back. The all-time high on Intel, about $75. I'm eyeballing on the chart. $75. So if you invested all your money in Intel in 2001, 23 years later, you're down 75% on your money. Oh, you got a little 1% or 2% dividend over there. It's just been an epic disaster. And you consider what tech has done since then. It went from Intel inside to Intel nowhere. Just the worst run company in the last 20 years. Absolutely. Every time we talk about this, I just throw up thinking about it. Terrible stock, terrible company. They'll screw this up too. They screw it all up.
There's absolutely no upside in this thing until it clears $22. On its disaster day, that's where it popped. It got a little rebound. That's where it popped to. You're at 2108 now, and you got a little bit of a bid. But until you can get in that gap area, what you're going to have is the people from channelingstocks.com were buying it under 20 and 19 and a half or whatever, and they're saying, I'm just flipping this out before 22. I could care less if it ever gets back above 22. Then they rinse and repeat the trade, because there's enough volume in that if you're swinging a big stick that you can do it. But right there, $22. That's what you need to clear in Intel.
Maybe eventually they turn around. Me and Joel still have a position here. We thought the foundry business, is going to go, but it's just too many years away and it's losing too much money. And you know what? I just feel sorry for all the shareholders, including myself. Next. Now I'm depressed. Ulta, Autodesk, Marvell, Dell. Dell's a natural segue. There's a good story.
Yep, that's where I was going too. So Dell reported earnings. Those came out yesterday after the close, right?
Yes, it was after the close.
All right, sorry, hold on. We got to give it a refresh right here, get these numbers pulled up. And we were talking about on the pre-market show. I thought it was a pretty solid report, and I was surprised the stock's not trading up higher. But let's give those numbers real quick.
Yeah.
The EPS came in at $1.89, beat the $1.71 estimate. Sales came in at $25.03 billion, beat the $24.14 billion. So beat on both EPS and sales. And then going into some of the numbers, like the data center revenue was up 80% year over year, I believe the number was. Let me see some other. Do we have any guidance? I don't know. I mean, why do you guys think the stock's only up 5%? I would have thought that it would be up a little bit more on this.
It was up at 120, and then I won't say the Kramer thing because everybody, poor Kramer, he tweets out, I really like Dell here. And then literally 5 seconds later on the conference call, they talked about the margins getting tighter in 2025 and going down 185 basis points, going from my memory. But the stock fell $6. It was the same, like 5 seconds after he tweeted. That's just bad luck. Sorry, Jim. I like Dell too. So I'm kind of with you, but your tweet was just impeccable timing. It fell $5 5 seconds after he tweeted that. That's just funny in itself. But, Kramer's been doing well lately. We've been giving Kramer a lot of love. He's been doing a lot better than he was before when the inverse Kramer stock came out and all that fun stuff. Obviously, our friend Tuttle over there at Tuttle Capital. I'm long stock, the Dell still, long the stock. I bought it poorly. I'm basically in from around this price, but, I did buy more down there, which helped average me down. So my original purchase was terrible. Got caught up in the AI bubble here. It's come back a long way.
Yeah,
it's not like you're getting this at 90 anymore, 95. We're up quite a bit from those lows. Mm-hmm. So it's not going to be as easy sledding as it was on August the 5th when everything was easy sledding. Just close your eyes and buy on August the 5th across the board and make 20% on your money. Those days are not here now. And we have, other things happening. NVIDIA obviously down on pretty good numbers. AI, price for perfection, September coming. So I'm probably not chasing anything at this point in time. People keep asking, what are you buying right now long term? Nothing. I'm not buying anything right now because I think we're going to a tougher seasonality period. But that being said, I don't think I'm selling my Dell either. I think you got a 5-year time horizon on this. I believe in Michael Dell.
This is man, look at that long consolidation, kind of like the market just chopping. So now we're above that top of that long consolidation area. So important to hold. I'll call it 114, 115. You're a couple bucks away. You hold that. You build the bid here, higher skies or higher prices for it. If you're looking for it just looks tight right here on the 30-minute. And I'm not going to give you a daily level, but if you really want this to get back to the pre-market high, you're going to have to clear out this 118 seller.
PC.
Yeah, PC. Oh, okay. Let's go.
All right, I'll give a quick preview. We got those numbers coming out here in 1 minute. We're looking for 2.5% PCE year over year. The PCE index for July, the median forecast is for 0.2%. Core is also at 0.2%. Core PCE year over year, we're looking at 2.7%, would actually be 0.1% higher than 2.6%. It is 8:30 now. We should get those numbers.
Waiting.
Any second. PCE index year over year, 2.5% versus 2.6% estimated, 2.5% prior. So that stays in line, 2.5%. USA core PCE came in at 0.2% versus 0.2% estimated. So that is in line as well. Everything is in line.
You know what? And so are the SPOOs. I was looking at this and I was like, it's either going to be good or
They don't know
bad.
what to do with it.
Yeah, and it did. We did make a new high, so that's significant at 39.75. I like to get us above that. I like us to establish a bid here at 56.40 and then move up to that area. But very tepid here. We also will note that we ended the 8:30 bracket at 35.5. So that's a 1.5 star support. If we get below that 35.5, could look for some leakage. But really not much action off that PC number.
Quiet.
Right in line.
Quiet.
Yeah. What about TLT? TLT, our lie detector test. How's TLT trading? Let me go.
I didn't notice where it was before. I think it was flat because I wasn't noticing it, so it might have ticked a little bit higher. I'm guessing because I wasn't really noticing it this morning. Usually, if it's moving, I take note. So I think it was pretty close to flat.
We just gave the PC numbers on this channel. All right. That's it. Is it? Is it the fireworks? Is that it?
Yeah, there are no fireworks at all. Yeah,
no
fireworks at all. There's no need to go wide today, don't look like.
Yeah. All right, we've got a few minutes
back to
left.
earnings.
Yeah, we got a few minutes left before our guest Tim Quast comes in for the day.
What about Ulta?
Earnings. Yeah, I just saw that. Let's go to Ulta here, of course.
The Buffett stock
got a boost a few days ago when it was announced that Buffett was investing in the company. Anyone who bought in chasing Buffett now in a hole because Ulta reported EPS of $5.30, which missed the $5.55 estimate. Sales came in at $2.55 billion, missed the $2.61 billion, so missed both on EPS and earnings. And not just that, the guidance came in. Let's see, they adjusted their guidance slightly, or actually, so they raised their guidance, but I don't think it was above what the street was looking for. So even though they bumped up their guidance a little bit, it wasn't enough to, get investors to buy the stock after missing on both EPS and revenue. The stock got all the way down to $330 and then got bought back up to $340, but still about $40 lower than what it was just a day ago.
It got down to the Buffett buy zone where we know he bought the stock originally. And, it found some buyers there. But this was not a great report. And I think Buffett kind of knows this is not like, your hot stock. This is more of trying to be a turnaround story because the stock has really fallen from grace here in the last year. Like, obviously, I started the year near all-time highs and is off, 200 points. So I don't think it's going to be just clear sudden because Buffett bought it. And obviously, that's not the case. Do you want to jump in because Buffett is in? Some people are, and that's who's defending it down there at 335.
Yeah, I was the same thing. If you think of whooping up on this thing, Warren, once he starts doing something, he starts doing more of it. It did get to the Warren, filled the Warren gap area at 332.92. Oh, wow. What was the actual low? The actual low was 331.97. So you did get your gap fill way above that. Now I think you're going to have to pick a price above that if you want to get in. Now it's gapping into a gap.
The gapping into the gaps. I do see Tim Quast in the background here too. So we're going to get him on here in just a minute. I think I'm just staying away, Ulta. I think at this point in time, it's too hard of a call. You do have the Buffett buy zone below, so maybe 320 to 330, you probably find buyers. 341, I feel like I'm just in the middle of that gap. I'm in the middle of nowhere. And like I said, sometimes, you don't have to swing at every pitch. This one looks like it's in the dirt.
All right, well, let's go ahead and bring Mr. Tim Quast on of Market Structure Edge. It's been a few weeks since we've had Tim on. Let's catch up with Mr. Tim Quast. Give him our special pre-market prep welcome. All right, Tim, welcome back to Pre-Market Prep. How are you doing this morning?
Well, guys, it's great to see you. Thank you. I've missed you. It's a treat, an honor and a privilege. So thank you for the invitation to come join. Dennis, Joel, AB, I
Yeah.
can't see you, AB, so I don't know how you're looking, but
I
Dennis
know
and
I'm
Joel, you
having some
guys are
camera
looking good.
issues this morning, but you know, it's
Hey,
we're,
we're falling, folks. We're falling out of bed here, so just watch your bids. What's going on, Tim?
Oh, it's a beautiful last day of August 2024 here in Steamboat Springs, Colorado. You can kind of see behind me that the days are getting shorter because it's we usually in the past we've done a lot of this in the dark, and we're returning to it here. The season's shortening, but it's like 41 degrees here this morning. Probably
41.
yeah, it is. It is. That's what
Chilly.
happens in the mountains. It's chilly. Yeah.
You're ready to go get the skis out. Start
Oh,
going.
Oh, absolutely. Yeah, we were all talking about it yesterday. Like you have your ski pass.
All right. So how the boys loaded for the end of the month? Like roll the end of the month index observations expiring. What do you got? What are you looking at?
Yeah, so I always say that I don't think these things get the attention that they should. For the folks who have not heard me bleat on about options expirations, the background is in 2014, the SIBO created this series of index tied S&P 500 tied options to help the exploding index investing complex true up their tracking. If you have a bunch of movement in prices, if the Magnificent Seven have performed less well than the equal weighted S&P 500, you get to the end of the month and people aren't going to be properly tracking the index. So they buy baskets of options and somebody sells them and a bunch of people buy them. And who makes money and who loses it? I don't know. I can tell you that what we would construe from yesterday's action, very light volume, though. You saw that, right? I mean, the volumes were like a quarter of normal levels,
August,
right? But the thing that moved best was the Dow. So you would look at that and say, what does the Dow reflect? Low volatility. So there is once again a rush for people to sell volatility because they think that there isn't going to be much of it. Now, if they're right, that works out. But that's why we tell traders, look, it's not, we don't start over new every day. And it's just a new start from zero day in the stock market. There is a cadence and a calendar and a continuum, and you need to know where you are along that, or you can get caught out. And so if you're risk averse, you avoid days like today. I think that the market shows a central tendency to decline. And you would say, well, that doesn't make any sense. But we can debate that.
Well, expand on that. Why?
I'll tell you why. So here, I'm going to share my screen. By the way, I've been running data businesses for 20 years, and the bane of data businesses is data. Right? That's the problem. And we have a data outage from one of our third-party suppliers today, which is a large stock exchange. I won't say more than that, right? Okay. So I don't want to disparage anybody, but anyway, so it means I don't have data from yesterday, but you can still see the central tendency. So you were talking about Ulta. Here's the supply-demand view of Ulta. Then I'll take you to the broad market. So if you have falling demand and rising,
there, Tim. Can you share your screen?
Yeah, let me pop it up real quick. There we go.
There it is. Okay. Got it now.
Okay, good. So it's just an example. So here's Ulta. If you own Ulta and you see this happen, that the supply side is 62% before they report results and demand is falling, you don't want to own that. You might want to short that, right? It tells you that convergence causes prices to fall. What's that? Falling demand, rising supply. What happens to prices in any environment except ones where the Fed and the government interfere with pricing mechanisms? Prices fall. It's diverging demand and supply produce the opposite outcome. So look at the broad market. Here's the thing that I'm concerned about. This data is the S&P 500. So we compile all of the data for the 500-ish. Could be 504, could be 498, depends on quarterly rebalances. We have that coming up mid-September, September 20. And then we look at the demand and supply across that measure. And so, when demand peaks, the market tends to fall. When demand bottoms, the market tends to rise. It's pretty simple stuff. Here's the issue. This pattern over here, the 15 days at 50% short in the broad market, and it hasn't tipped over, is very unusual. We look at patterns. We're all about patterns, trends. And a pattern like this without a consequence is very unusual. So I look at that and say, well, I'm shorting that. I could be wrong. I always hedge. If I'm going to short the market, I'm going to offset that with something that represents the fact that I might be wrong on a given day. I know what the central tendency is, but there is no guarantee that 15 days at 50% short is going to tip the market over, but it might, right? And I think that's a broader reflection of the over-reliance of the index investing community on a small set of stocks that are underperforming, right? If NVIDIA loses 300 billion of market cap in a day, that's a big deal for index investors, for 401k investors. And so I don't think that consequence is manifested. Sometimes we can avoid consequences. Most times we don't. That's why I always say it's a central tendency. Real-time data has no pattern, no central tendency. It is dominated by Citadel, whom you cannot beat. Citadel possesses better data than you. They're always ahead of you. All right. But that's patterns. Citadel does not know that pattern. So this is why I focus on those. And that's my concern.
So we're coming into September here. Are you looking at seasonality traits here as well? Because September is historically a weaker month for the markets as well. Does that come into play here too, Tim?
Well, it could, Dennis. You're absolutely right. If you look over the long range data set, the worst performing month is September, not October. We tend to associate October with big crashes because some have occurred there. But you're right. September is the one that surprises. And why is that? Look, we used to say that you'd sell in May and go away because everybody, all the traders went to the Cape and the Hamptons and they weren't doing anything. But the market's 100% electronic, all the same as 100% algorithmic. Most of the trading for the very large investors who have model-driven exposure to the markets that reflect what all of us do, target date funds, balanced funds, low volatility funds, those are running on scheduled algorithms. So you can't use that old principle anymore because it doesn't reflect how the market works. But I think that risk management systems, management people make changes to start September. They look at data and make adjustments and wham, it can hit. Could be good, could be bad. But I think that's what occurs. But I'm curious what you think. Why is September bad, and should seasonality factor into what we do?
I look at it not so much from a trading perspective, because I do a lot of short-term trading, but from a positioning perspective. If you're swing trading or long-term investing, you're always like, from a long-term investing perspective, you're looking for that dip always to buy. So that's usually what happens. So I do just play, and there's so many seasonality trends here, Tim. I mean, you have seasonality traders that just live and die by all the different trends, where people are even looking at payrolls, coming in, at the end of the month. So that's, typically a stronger time. And you can look at that data, and there is, and that's a funny thing about data. Maybe it's just a general data question for you too. The funny thing about data is the data, but you can interpret data in more than one way. So two analysts can look at data and come up with different conclusions here, which makes data, confusing as well. So bringing it back to just the markets here, Tim, and my thoughts on sentiment. I mean, September can be weaker, but I don't know necessarily if it's just because it's often weaker, so traders are just cautious going in, and there's less people putting on the buy button. So maybe it's self-fulfilling.
I agree with you. And speaking of trends, I'm a data guy. So I used to be on CNBC routinely with Rick Santelli. This is back a while ago, on productivity and jobs, because it's one of the things that we look at. For 15 years, we've been modeling jobs data. And so several weeks ago, I sent this data to CNBC ahead of the August jobs data for July. And I said, is anybody looking at the trends? I mean, look at the trends. I'm going somewhere here about what I think could catch people out. These three trends that you see are the core measures of the US jobs market. You don't have to know all the details, I'll explain. This is workforce data. So this is all the people who have a job or want a job. And that is rising. You know, it dipped during the pandemic. This is where we are as of July, rising. This is the jobs data, the people who actually have jobs. Well, it stopped rising in February of 2023. And last week, in a shocker, you know, the BLS backed out 800,000 jobs. So we have a rising workforce. We actually have a downtrend now in the number of people employed. And if you look at unemployment, it's actually up 22% from where it was December of 2019. Now, you tell me how that can continue to drive economic growth. I'm not making that up. That's the government's data. I just graphed it. And so I look at that. Then I come and I look at the dashboard for Edge. And look, I'm neither an optimist or pessimist. I'm a realist. I just look at the data. And if I look at all of the trends, I mean, momentum and low volatility are always going to have divergence because that's what they're designed to do. Yesterday, there were only 8 in each, meaning it's very dicey to trade momentum. SoFi. I mean, SoFi was a great trade yesterday in the momentum, the daily trading ideas category. Buy at the top of there was an entry range. You can make 10% on it yesterday. But those opportunities are shrinking. If you look at what drives the market, mega caps are 118 companies with 100 billion or more of market cap. They are 78% of all market cap. Downtrend in demand. Supply is fine, but this isn't great. You know, you can look at all of them. Airlines, cruise ships, not looking good. Big tech, not looking good. Communication services, topped. It's not bad, but it's not good. It's not where you would buy. AI, tipping over. That's not what I'm buying. Consumer staples, consumer discretionary. They all have peaked and sliding demand and rising supply. Well, I look at all of those and say, unless something changes it, that's not good. Dow Jones, falling demand. Supply side is fine. No one's short the Dow, but if people stop putting money in it, what happens? Well, probably prices fall. Now, I could look at all this and it could change tomorrow, but knowing what we know and knowing what the trends are, this is not a market I'm buying right now. I shorted it. Well, I could be wrong, but that's what it is.
Hey, Tim, could you do a rundown on NVIDIA?
Yeah,
I know you
sure.
have the current data. We have our way of technically looking at it, fundamentally looking at it, and just wanted to see what the numbers have to say. I know it's a day late and a dollar shy, but what do we have going into the report now? And just walk us forward.
After the report.
Yeah. And I think you all arrived at the same conclusion that we do. Right ahead of earnings, falling demand, rising supply. Very similar to Ulta, not nearly as bad. It's not a spike, and I could show you some others that like Dollar General, same thing. Terrible supply side. But this is this is much different than the patterns that we had in NVIDIA the last 2 earnings cycles. So if I just back up to the year-to-date data, and you look at the last 2 times they reported here, they had falling demand but falling supply, and it was way over the 5, way over a bit. This is huge excess demand. So the price rose. When that falters, don't own NVIDIA, right? Why have your money invested in NVIDIA during this period of weak demand when you could do something else with it? Soon as demand strengthens back above 5, you can return. And they reported here too. Same thing. This time, look at that. Look at that. There's no other pattern across the entire supply chain like that. You would look at that and go, well, I don't want to own that. And that's how you use the data.
You don't want to own NVIDIA. You don't want to own the market, because as I can, we can say that, oh, we're past the earnings event, we're past the NVIDIA event, but I will promise you, if NVIDIA rolls over, it will take the S&P with it. It is just math.
Yep.
100% agree with you. I say all the time, these people who talk about, well, the rally's broadening out. There is no such thing. There's no such thing as that. The entire utilities sector is smaller than either Apple or Microsoft. If you are BlackRock, I'm telling you, you're not replacing 170 utilities with Apple or Microsoft. It doesn't work. Okay, it doesn't work. So you're exactly right, Dennis. If indexes have to adjust their exposure down in NVIDIA because it's causing tracking errors, the entire market tips over. And it doesn't matter what the fundamentals or technicals are because it's a simple mathematical fact. I agree with you.
Tim, can I make a recommendation here? And I don't know if you can do it. And if you
Okay.
can do it and it works out great and you make a lot of money, can you cut me in on it?
Sure.
So I'm looking at
Mhm.
NVIDIA, and obviously you have the dates here, right? So if you
Yep.
have the dates, you also could put like the closing price or the high or something like that. Because
Yes.
because when you're looking, like if I would have looked at this, I kept on harping on the 130 number, right?
Yep.
And
Uh-huh.
but and then if you look at the chart, it's supply. It's a ton of supply. So
Yep.
if I could, if I was like, your thing has meaning to me because it's above and it's like the supply is there. But
Yep.
if it had like a 130, correlating to the closes on the dates, and it's really tight, it'd be hard to do. I mean, that would have just, that would have added validity that thing wasn't going through a report and
Yep.
there was more risk to the downside.
Yeah, it's a very good idea, and we do it with the daily trading ideas, and we'll
Okay.
certainly expand it out. So, if I look at Kava, it's going to show you everything. It's going to show you high, low, close, right? So, and
Ooh.
and that's what we're after. You know, it's I say that the best thing for if you're going to be a market structure trader is you're not even investing, you're taking a toll. You are a toll collector because the market is volatile. If you just take the trailing year in the S&P 500, the SPY, tally the down days and the up days. Well, it's down 64% if you just add up all the days that it was down, and it's up 86% if you add up all the days that it's up. All we're trying to do is stack the probabilities of capturing one side or the other of that, long or short, more effectively. And all we're doing is saying, okay, if there's a volatility range, what is the probability that I can take 2% or more of that? That's what we're after, because you can't beat Citadel, but you can do this because Citadel will give you that. So you're right, Joel. I think we want to put it everywhere on the platform. We just got it in
Yeah, it
daily
just
trading
takes
ideas.
a little. I could work with your programmers if you want.
Okay.
Tim Quast, you guys know him, the Quastinator. Usually Market Structure Monday, but Market Structured Friday here to end the month of August. Tim, you're going to get you back on here again next month. We'll dial you up for that, and stay warm out there.
Very good of you guys. Thank you very much. Enjoy the long weekend, holiday from the market Monday, and that's awesome. Take care, guys. Thank you.
Have a
Thanks,
great
man.
long weekend, Tim.
Thank you,
chat
AB.
soon. All righty, guys. We've got about 7 minutes left of the show.
I just want to expand on the S&P because the top 6 stocks. So you have the top 6 stocks are Apple, Microsoft, Nvidia, Amazon, Meta, and Google. The top 6 stocks make up 30% of the S&P. 30. When Joel and I started doing the show back in 2014, we've been doing it 10 years. The top 10 stocks made up 20%. So it shows you how much more concentrated the S&P has come into tech. Because now the top 6 stocks, number 1 stock used to be ExxonMobil years ago, Joel. ExxonMobil
IBM,
was number 1. It's like
GE.
number 13 on the list or 14 now.
It's right here.
So it's
I pulled it up.
amazing what has happened. And again, if you're trading the IWM, it can absolutely go up without tech. Sometimes it moves opposite to tech. We know that. We've talked about that. But if you're in the S&P and NVIDIA and Apple and Microsoft roll over, that is 20%. Those 3 stocks are 20% of the overall S&P. The other 497, the other 80. They are so heavily weighted. So again, when you're buying and investing in the S&P, you are buying a lot of those top 6 stocks. So just keep that in mind. Yes, the S&P is diversified to a certain extent, but it is now very concentrated, much more so than it was 10 years ago when we were saying, hey, the top 10 components are 20%, the other 495 are only, 80%. Now it's even worse. The concentration has gotten worse. So this S&P, we won't say market, we'll say S&P is very, very dependent on tech. And that's why you see the S&P hold up very well when mega cap tech is doing good. Mega cap tech cap gets hit on August 5th, and the S&P is rolling out of bed. Hadn't had a 2% down day in 350 days on the S&P before July. Obviously, S&P, very tech-centric. Tech hadn't really been hammered like that. Boom. We get 2 of them in August, I believe, or at least 1 of them, 2, I think it was, in a week. So just keep that in mind when you're investing in S&P. It is a very, very, very heavily invested.
We used to look at this, Dennis, and it used to be GE, IBM,
all kinds of different stocks.
J&J,
ExxonMobil.
J&J, Procter
Diversified
Gamble.
top 10.
What?
It was a diversified top 10.
Yeah.
And it's not anymore.
No.
Not
and
at all.
Look at this. You even have, more tech here with Broadcom sneaking into it.
Tesla.
Yep.
Like you want to go out, it's probably, if you start adding up the other ones, it's probably S&P 40% tech now. If you wanted to really, like you can get an argument because the Qs aren't 100% tech. We've talked about that before. That's like 90% tech. But I mean, the S&P is basically a tech index right now. Like it's 35 to 40% tech. Like we just add up the top 6 companies are 30, but then you're right, Joel. 1.5 for Broadcom, another 1.2 for Tesla. Keep going down the list, and those 500 companies, there's a lot more little tech stocks there. Netflix, 0.63, Salesforce, 0.54, Adobe, 0.54, AMD, 0.5. I mean, you could start adding up all these 0.5s and 0.6, Accenture, 0.45, Cisco, 0.43,
Oracle,
Qualcomm, 0.41. You might get up to 40, 45% tech. I don't know if anybody's got those stats. Maybe it's just out there. We're adding it up. But I looked at an article just from, somebody was saying, tech's only 22% of, somebody had an article, 22% of the S&P. It's wrong. It's dead wrong. Dead wrong. You can add it up right here. It's a lot higher than that.
Yeah, even getting into Texas Instruments, IBM, down the line starts to thin out. AMAT here a little bit, but you can see it's definitely a lesson to be learned here. And also
just know what you're investing in. The S&P is no longer diversified like it was across sectors. It is very heavily tech. It's got a few other things in there that help it a bit, but it's not heavily diversified. Where you go and take something like Berkshire Hathaway, it's a little heavily financials and industrials, and obviously, we got a little bit of Apple in there too, but you just got to know the makeup of what you're investing in as well. So if you're looking, I'm just going to buy S&Ps because it's diversified, it's not the best vehicle anymore for diversification. It's really not. You're buying heavy mega cap tech if you're buying the S&P.
And I forgot I hadn't looked at that in a few weeks or so. And look at that. Apple back on top. Everyone made a big, different indicators. I've been using this one. I used to use Morningstar, but Apple back on top here by a wide margin. It's really, I don't know. I'm a little worried about Microsoft here. This thing is like way off its high.
It doesn't look healthy.
No. And look at
Microsoft
Apple.
does not look healthy to me. And people will be saying, oh, well, you have an overall uptrend still, which you definitely do. You go out to the weeklies. But
these boys are tired, man. These boys are tired.
They are tired. They are tired. And we're coming into September. There's just no reason to be a hero. And you know what else? Interest rates going down are not going to be a catalyst for Microsoft. So maybe we do got to start looking out a little bit farther. Maybe there's a reason that Berkshire Hathaway goes up every day. Maybe there's a reason that the IWM has started to perk up here again. Maybe, just maybe, people are really heavily tech and they're like, maybe we got to move into some other stuff just for a while here anyways. If interest rates start going down, it doesn't benefit tech like it does other things. So keep that in mind when you're trading.
All right, we're about 1 minute left. Anything else that we missed? We never got to Marvell, but that was another earnings stock.
Marvell, okay, it's up 7. Again, I'm going to say it today. If you're buying Marvell now, you are absolutely doing it backwards. The stock was $53 on August the 5th at the beginning of the month. At the end of the month, it's $77 here now. This is when you ring the register. If you bought this on August 5th, August 6th, August 7th, August 8th at 56, 58, 60, it's ring the register time. We are still in this market where buying dips and selling rips works. This is a rip to be sold. Does it go to 80? Maybe. maybe it goes up, but it is not going to be easy sledding. Marvell is cyclical too. And if you want to talk about Alibaba saying up, down, left, right, all over the place here, Marvell's been the same thing. Marvell's at the same price it was a year and a half ago. It goes up, you sell it, goes down, you buy it. This stock is more of a range stock than a trender. So, and maybe tech is going to be awesome and Marvell is going to be a $150 stock 5 years from now. Very possible, but I don't think it's going the same way there. And I think you get a shot in the 60s again at one point in time. So I would be a seller of MRVL on this strength.
All right. Well, that brings us to 9 a.m. Thanks everyone who tuned into pre-market prep with us this week. Hope everyone has a great long weekend. We'll be kicking off next Tuesday, of course, with a T3 Tuesday. So
you got it.
We will see you guys then. Everyone stay safe. Have a great holiday weekend. And we do have live trading starting up right after this. So make sure to hang out with Faluna and crew there. Joel, Dennis, any final words?
Go blue.
Go blue. Michigan man.
First game of the season. But I won't be there. I will not be there.
And you know who else won't be?
Who?
Well, a couple guys. Connor Stallions, Jim Harbaugh.
Just win, baby. Just
Blake
win.
Corum, JJ McCarthy.
Oh, you don't need to. Oh, and who do they got on? We don't. I mean, this could be an hour show. Who we got on defense? Okay. We'll talk about this in the after pre-market show.
All right, in the post-market show. All right, guys. Have a great weekend. We'll see you guys on Tuesday.